Hello and welcome to Credit Shift News and Update. This week I'm Paul Sweeney, co-founder and chief strategy officer here at Webio, and today I'm joined by our CEO and co-founder Cormac O'Neill, and we will be exploring some of the recent news stories, events, reports and trends in the credit industry. Cormac, it's been a hell of a week for Webio. Would you like to share some of our news with our avid listeners?
Hey, Paul, how are we doing? Yeah, I think we kind of touched on this, or we flagged it on last week's call that we would have an announcement. So this week we announced the launch of our new UI, which we are really excited about here at Webio. The new UI has been 24 months in the making and developing. It's very much focused around what we are doing around our AI strategy. And the feedback so far since we launched it into existing customers and new customers has been absolutely fantastic. I'm really, really delighted to see how the new UI is being received. It's a real refresh of our platform. It's exceptionally user friendly. What it's doing and what we are attempting to do around the use of AI and what we call our custom collections language model is really great. And again, you know, the reception it's getting from our users, which is what it's all about, has been fantastic. So that was announced last week. There are going to be more. We kind of did a general announcement last week. This week is going to be all about explaining the additions to the platform, what it's doing, what we're looking to achieve, the problems that we think we're going to solve for our customers as a result of this new release, and the pains it will alleviate. So you'll be getting more and more on the detail this week on the different areas and the different capabilities of the new UI. So yeah, it's a big week. I think everybody was quite excited about it, Paul, weren't they, among the team to see this work?
It's really such a massive uplift, like from start to finish. It's like fundamental. This isn't just a new coat of paint. It's a fundamental redesign of nearly everything. So it's amazing to see, for it to go from the diagrams to the development to the prototypes to all the different environments that has to pass through. It's pretty amazing. So it's just amazing to see, because the amount of work that goes into this is
some amount of work. So and a great team effort across the board, from getting customer feedback into our existing UI and how we incorporated that into the release we just announced, the design phase, brilliant, the feedback loop, the actual development of it, all the way up to the release last week. You know, a real team effort to get this one across the line, and we're very excited about it. Yeah.
A big sigh of relief that it's out there in the world now. So let's get our advertising bit over. Hey everyone, come over and check us out. This thing is well worth booking a demo and getting a run through.
Yeah, you know, absolutely no bugs whatsoever, Paul. Absolutely.
Thank God.
Yeah, no bugs.
Thank God.
It's the only
I'll tell you, there's a big difference between launching a screen and an entire platform.
Yeah, there is. There is. Yeah, there is a big difference. Yeah.
There's always going to be something.
There might be one or two bugs come up. Yeah, that's true.
Always something. Okay, let's go on to general industry news. Latest Bank of England data has highlighted that mortgage defaults and missed payments on credit cards and loans both surged at the end of the year, and we are expected to keep rising. Missed credit card and loan payments as a percentage of balances are higher than they have been for the last 5 years. Mortgage defaults were worse in the second quarter of 2023, but other than that, they're significantly higher than they have been for at least 5 years. Among lower earners, 27% are in arrears and 37% have debt worries, with the average low earner now owing £168 a month, excluding mortgages. However, middle earners are in trouble with an average unsecured debt payment of £315 sterling a month. Demand for unsecured borrowing fell in the last 3 months of the year, and credit card demand is expected to rise in early 2024. The length of interest-free periods for balance transfers fell at the end of the year and is expected to stay at this level. The real fear here is that the banks will realize their exposure to these bad debts or these debts that may become bad, dial back on their lending, and a lot of people will hit a brick wall in terms of being able to access new finance. So again, we've been tracking this coming through for a while, Cormac, maybe 6 months. We've been highlighting that this is going to start peaking in the new year. And well, here's the numbers coming through now.
Yeah, look, I guess, Paul, no surprises on this. You're dead right. We have been flagging this. Look, the reason we're flagging it is because we live it ourselves every single day of the week, every single week of the month, and every single month of the year. So, we spoke about the reduction in people's disposable incomes as a result of increased interest rates, and we're seeing it here again filter through. So look, there should be no surprise in what you've just read out there, Paul. No doubt about it.
Well, the cost of living crisis was a contributing factor to all of the above. Household bills have surged £326 sterling on average in the last 12 months, according to Compare the Market. The research analysis of the cost of energy, water, home insurance, motor insurance, and council tax was included in that number. The increase in average car and home insurance premiums have significantly impacted the cost of household bills. The cost of car insurance is currently £951 at 322, or 51% uplift versus 12 months ago. The average cost of home insurance is currently £197, a £46 or 30% rise year on year. The increase in insurance premiums may in part be due to a rise in the cost of claims for insurers. Those numbers really knocked me back, Cormac. They are huge increases when you stand back and look at them.
Yes, they are, and I'm smiling as you're reading them out because, Paul, we're in the fourth week of January, and I don't know how I've done this, but all my insurance renews in January. So I got my car, I got my house insurance, I got my health, and it's like, it's just such a drag. And I went through each of them over the last 2 to 3 weeks. Every single one of them have gone up, and you ring up your insurance broker or direct with your insurance provider, and it's like, what's going on here? I haven't crashed a car in 20 odd years. My house hasn't changed. I don't think my health has changed, yet you're whacking me with all these increases. It's just like, and yeah, look, what I will encourage every single person who's listening to this to do is to haggle. Just old-fashioned haggle, and you will get a reduction. You will, you mightn't get a massive reduction, but if you're getting a reduction, if you're haggling and you're pushing, you will get a reduction. Because one thing that's actually happened with the introduction of digital and the adoption of digital is it's so easy to renew. All right. So every single one of my insurance policies, I can do it online. Like, I get a link. Go in, renew your insurance, click the big green renew button, and you can do it right there and then, right? And I guarantee you a lot of people probably do just go in and accept what's in front of them and click. But, if you lift up the phone and talk to them and go, hey, guys, nothing has changed. Why is this increasing? You will get a reduction. So, that's my top tip. Don't just take the digital option. Sometimes go the old-fashioned way and pick up the phone and have a conversation, and it will pay for itself.
Well, I'd be a little bit different than that, Cormac, in that I believe that you should be able to negotiate through your chat. You should be able to explain that you don't have any differences.
Tone of voice, Paul, is very important when it comes to haggling. You gotta, there's certain words you gotta put an emphasis on when you're haggling, but you just can't do textually. Just doesn't work, man.
I'll leave it to you, the master haggler. I'll move on to the third part of this first part of what's changing in the world, the economy. And we just mentioned council tax as a contributing factor to rising costs. But many councils are experiencing a dramatic increase in non-payment of council tax, further hindering their ability to function. It is estimated that unpaid council bills across England, accumulated over many years, rose by 53% between March 2020 and March 2023. from just over 3.5 billion to just under 5.5 billion. The consequences for people that miss paying a tax bill can be significant. They can face a demand for a whole year's worth of payments, extra charges, bailiffs at the door. Like, there's real implications for people missing those payments. An article in The Guardian this week says that 1 in 5 local councils will be insolvent by next year. In November of last year, Nottingham City Council issued a Section 114 notice deeming it could not deliver a balanced budget. 4 English councils have declared insolvency in 2023, but in 2024, a number of councils are sounding the alarm, including Stoke-on-Trent, Middlesbrough, Somerset, Bradford, and Cheshire East. The Guardian reports that the money councils received from central government underwent a real terms cut of 40% between 2010 and 2020. So this is not something that was on my radar. I know that a lot of our customers and a lot of our employees are in the UK, and these numbers are, again, just shocking in terms of the amount of money that people are trying to get organised.
So it's actually, as you know, Paul, internally it's quite topical in Webio, because in the last quarter, and you're right, like, councils isn't something that we would have said is, particularly on target customer for what we do at Webio. We just wouldn't have thought about it in that way. But in the last quarter, 5 months, we've had a number of inbound inquiries to find out more about what we do at Webio in terms of how do we help organizations and enterprises, talk to their customers around collections. So this is one, literally this morning we had a discussion on to see how do we look to provide an offering to councils to help them with this challenge that they have, because you are correct, those numbers are pretty startling in terms of A, the level of debt, accumulating debt, and B, I'm not sure, did you say 1 in 5, 1 in 4 could be insolvent next year? Which strikes me as a staggering number. So clearly there's a real issue here, right? Clearly there's a real problem. And well, hey, maybe we'll be able to do something to help some of these councils, So
it's one of those like systemic problems, and that if you can't collect money, you can't spend money, so you don't have the right services, so people keep on falling behind. It's a pretty bad loop to be in. Anyway, moving on to Section 2, FinTech, BNPL, AI, and related news. This week, we're heavy on the FinTech. Cross-border payments firm Wise continue to rack up new customers in Q3, leading to a 40% increase in income to £375 million. In a trading update, the firm says active customers grew 30% year on year to 7.5 million, driven by increased adoption of the Wise account and multi-feature usage. Alongside this growth, approximately half of all personnel and business customers now use multiple features, such as their Wise card, as well as the money sending app. Reflecting the continued strong growth, Wise has upgraded FY full year 24 income guidance to 44% from previous guidance of 33 to 38%. So I think it's fair to say that not all fintech is dead. Other research came out this week indicating that the traditional banks are still applying hidden fees to these types of cross-border payments. So I expect Wise to continue to do well in this space. Are you doing anything with cross-border payments with banks, Cormac?
Not on a personal level, Paul, I have to say. No, it's not something that I would do, but they're stellar numbers from Wise. And without a shadow of a doubt, listen, fintech's going nowhere, folks. I think we've said that before.
We've said it before. It's here to stay. It's here to stay. Some valuations took a bit of a hit, but we'll come to that.
Yeah, of course.
Another firm I came across during the week is a company called Cashable. So that's a K-A-S-H, Cashable, a fintech platform that offers credit to employees through a company's payroll system. They've bagged $25 million in Series B. Cashable integrates with employer human resource information systems and payroll platforms, enabling immediate access to loans that are automatically paid through salary deductions. The firm also provides employees with access to free financial education courses, including credit monitoring, individual financial coaching, and budgeting tools. And I was just really wondering what other systems, processes, and softwares within the enterprise could benefit from this kind of embedded finance approach. I always think it's worth thinking about. I mean, 10 years ago, would you have said that maybe there's value in giving your own employees access to I don't know if this is exactly a payday loans platform, but it feels a little bit like that.
Well, I'll tell you what, Paul, it reminds me of the good old fashioned, you went up to your boss and said, "Jesus, is there any chance you could spot me 20 quid this month? I'm a bit tight and, take it out of my wages, So I think this is the modern digitalized version of that. I think, it's what we can call a cash now, work later, I think is what we'll call this one,
I love that.
Yeah.
That's a great one.
So I think that's what we're looking at here, folks. We got a new 4-letter one here. Cash now, work later. Is that rhyme? CNWW? Nah, don't think so.
It'll be good enough. I like this. It ties to just a couple of trends around in previous podcasts when we talked about people being able to maybe get their inventory financed or get equipment financed. Like, what else in the business? Like, could you maybe make an embedded service like that? It's just worth reflecting on, because these are billion-dollar opportunities.
Oh, absolutely. Yeah, they are, and I'm sure, look, as always, there's new and innovative solutions coming in, and some will take hold and some won't. Again, I'm happy to see these guys are providing some form of financial education and coaching, I guess. I've no idea what the tools look like, because that's important, because, again, you're going to a point where people, and this is a form of credit, that's exactly what it is here. But the key is being able to monitor the different types of credit that you're after getting access to, right? So if you're now getting an advance on your monthly payroll or your weekly payroll, and you've also got a couple of buy now, pay laters, how are you keeping track of all of this and making sure that you're not causing yourself some pain down the line?
I always look at the alternatives here. Like, if you've got employees and they're spending 20% on credit card, and you can offer them like a salary advance at 2%, and it's an automated service that you give them, that's a big difference.
Huge.
People.
As long as you're being disciplined and you are swapping one for the other, and what you want to avoid doing is adding in an extra form of credit to an already stretched credit situation, right? So that's what you got to look out for here. So it is important that we have these educational monitoring and tools, or whatever you want to call it. I think they're key here, that people are educated on what they're doing. I'm sure there'll be many other areas within the business where we'll see embedded finance products being brought to the marketplace. I think we're going to continue to see that. You always think, where else do you look? And suddenly something else comes up. So I'm sure there are.
I was reminded of, I was listening to a different podcast this morning on, it's just an investor podcast. And someone was saying that they picked a year, let's say it was 2010, right? And cloud computing spend was, let's say, 10 billion. And 10 years later, cloud computing spend is at 300 billion. And so even if we think that like embedded finance is a big business, you might find in 10 years' time that it's 10 to 50 times the size, still a completely different kind of scale. Anyway, with that in mind, Lloyds Bank posted some news that customers are choosing digital channels over any other way to bank, with 8% of customers using a branch as the only way to manage their money. Out of the 21 million customers banking online with Lloyds, 17 million choose mobile banking. Lloyds are saying that they now have around 150,000 in-app chats happening every week. They were seeing drop-offs in their chat solution, but now they have a language model classifier, basically conversational AI, improving the app's ability to understand what is being asked by their customers. Lloyds report that they are currently on track to generate 12 million mobile messaging interactions with their customers annually by the end of 2025. Cormac, I think this is something we're definitely going to see more of. Conversational interaction through any mobile app, or providing your conversational customer experience through a mobile app more and more.
I certainly hope so, because that's what we are betting on here at Webio, in that conversational engagements will be the future and will continue to grow and grow. I have to say, they're impressive numbers from Lloyds. Hats off to them after getting 150,000 in-app chats, and I'm assuming they're two-way and not just one-way blast.
No, there's agents as well.
Yeah, I'm assuming. You would have to assume that's pretty impressive to be getting that per week. And again, look, from a customer's point of view, you're much better off having a in-app chat to get your solution, whether it's trying to find out what your balance is or what you're overdue or whatever your query is, and it's quite straightforward. You're better doing that through a chat interface than spending 45 minutes on a phone trying to get an answer. So that's good for them. Yeah, and this is only going to grow, Paul, as we know. We certainly think that, and the use of language models can certainly be a game changer, particularly if they're tailored towards your particular area or business. I think they're going to be a real game changer, as opposed to just generalist language models. That's what we're working on and we're betting on. So yeah, I'd agree with you there.
Well, as we might have said before, keep your eye on this space, because there will be some announcements there. Let's move on to the final section here, recent reports. So this week, there's an interesting report from the Cambridge Centre for Alternative Finance at the University of Cambridge. It's called The Future of Global FinTech Towards Resilient and Inclusive Growth. The study analysed data from 227 FinTech companies across various sectors and regions. It focused on business demographics, market performance, and social and economic impacts of FinTech. Some of the key findings include, of course, that artificial intelligence is considered the most crucial development factor for FinTech over the next 5 years by 70% of respondents. Embedded finance, the digital economy, and open banking are almost equally significant growth factors for the FinTechs. Consumer demand is a primary growth driver, especially in Latin America and the Caribbean. A skilled workforce and favorable regulatory environments are also significant for growth. Macroeconomic factors are the main growth obstacle, with funding challenges notably in Latin America and the Caribbean. The post-pandemic FinTech sector has seen over 50% consumer growth, but challenges like economic conditions and funding must be addressed for the business to grow. Sub-Saharan Africa reports a more favorable funding environment. We're seeing a lot of positive news this week from FinTechs and new banks doing business in South Africa. And our friends from Umba, Irish company, are doing amazingly well in Kenya at the moment. And I get great updates from them every month. FinTech services are increasingly reaching underserviced groups, such as women, low income and rural customers. There are regional variations, with women in the Middle East and North Africa accounting for a higher proportion of transaction values compared to Europe. The study emphasizes the need for regulatory innovation to match financial innovation for sustainable FinTech. And there's potential for digital financial services to improve access to finance for consumers and SMEs for more accessible and personalized products. So again, we're seeing a lot of action there in the global FinTech environment. I think it's the takeaway from the report for me is there's been a bit of a downturn in the funding and the macroeconomic environment because of interest rates that really hit the business models of a lot of FinTechs. And I think that what I'm seeing again is regional variations. So what works in one part of Europe may not work in another part, or may need to be repositioned or remarketed in different ways. So it's not like a single offer for every market. So well worth digging out the report and just kind of familiarizing yourself what's happening in different markets, because we often get just a little bit blindsided by things that aren't happening in our own geographies. So do go and check that out. The second report I came across was a recent study of over 2,000 organizations, and we're looking at customer service trends. And again, the report picks out that AI is the number one trend. But this time, the report picks out that even today, customers' expectations have risen because they expect companies to have implemented AI. And that's really showing up in terms of, if I'm on a web chat and I'm talking with a company, I expect that to be now picked up by a bot, or something that performs like a bot. I expect it to be very quick response, and I expect very decent answers to my questions very quickly. So even the fact that AI has hit the general culture so widely now through the Chat GPT and the OpenAI products, I think that has just raised the bar for everyone and what they expect to be able to do. That's my main takeaway from that. The kind of things that are turning up in product are, what you'd expect in terms of being able to review customer conversations for various, degrees of sentiment, or were they completed or concluded properly, or did they start off hot and end cold, or vice versa? Were they integrated with the knowledge frameworks, the knowledge bases of the company to answer questions, and kind of how frequently did that happen? So nothing really too earth-shattering from the what do people expect from a chatbot solution or from an AI-driven chatbot. Would tend to be, again, a focus on, can you use AI to automate fairly monotonous tasks that agents didn't want to do anyway? Can you maybe communicate with agents that this really is not a threat to agents? Like, again, I've had conversations with people who argue differently with me, but I do not see large scale layoffs due to the roll off of these technologies. It just allows you to use the agents you have more effectively and for more difficult tasks. So I think my takeaway from it is, I think that 2023 was probably a year where most customer service C-level suite were trying to figure out what they would do. Should they be experimenting with, where would it go? So 20% were doing that in 2023. A full 70% of C-level executives in 2024 are going to be actively engaging in deploying AI in customer service. So again, bang on the nose for us, Cormac, in terms of what we do.
Yeah, no, look, I think, Paul, it's a case of just be careful what you hype up, because what you hype up, you're going to have to front up. So clearly 2023 was a year of massive hype for AI and the capabilities of AI, particularly Gen AI and everything around ChatGPT and the likes. So I think what you're going to see in 2024 is we're going to move towards that implementation use case scenario. We're already seeing that, right? So people were just trying to wrap their heads around, okay, we got this new technology that seems like it could make an impact. So how do we now implement that and get some real solid use cases going? So I think you're going to see 2024 is going to be that year. And I think you said it there. It's like, look, customers' expectations have been driven sky high in terms of customer engagement. And I think if you start, you don't have to boil the ocean with this. You can start off with, relatively basic use cases, and then layer on top of that and get more sophisticated in terms of what you're trying to do. So long term, this is definitely this is a game changer. There's no two ways about that. And I think we're just going to see another step forward in 2024, more and more use cases, more and more implementation. While I semi-agree with you around the HR side of things. Like, it's definitely going to have an impact, not in the immediate term, but if it starts developing and improving year on year on year, there are a lot of roles that, could be automated. There just are. So, in the short term, we're not going to see massive, layoffs, but over the long term, but sure, it's like anything. It's like, the internet coming out. It's like, throughout history, we've had changes, and you just adapt, and you find new roles and new things to work on. So, yeah.
Well, I think it's just going to be interesting, because what I'm really seeing is people actually finding that they need to extend their capability. Like, I can't hire another 50 agents, and I have work for 50 agents. So I almost need to hire an AI to do that bit of work, that capacity building for me. And I think it'll just find more ways of offering customer service. Last time I looked, it may be 2 or 3 years ago now since I looked at this number, but between the jigs and the reels, there's over 1 million people working in the UK call center industry. And that's a lot of people. So this is a big question. While we're talking about it, is it how deeply is it going to impact the industry? I think maybe keeping an eye on that ourselves would be an interesting service to everybody. Okay, listen, that's it for Credit Shift this week. It's been a fascinating week here for everyone at Webio. We're thrilled with all our developments. Great to see some reports coming out on the future of fintech and AI and embedded finance and all those areas. For more stories, for more thought leadership pieces, and to check out the new advancements at Webio, do check out our website, webio.com. And thanks again for joining us for Credit Shift this week.